What? What's going on, everybody? It is Saturday night, and I am sitting in my truck with my three dogs in a rest area in Florida. So, time to go through some charts and take a look at what we expect for next week. Um, I have decided that I am going to be looking at five assets in five different asset classes in the futures markets. Um, and that's all I'm going to watch. Uh, I think that's probably more than enough. Uh, 'Cause between those five asset classes, I should definitely have uh, plenty of trading opportunities uh, on a daily basis. So what I'm going to do in this video is I'm going to mark up the last two of the asset classes. I've already marked up three so that you can see where I do my measurements and find my higher time frame liquidity draws, uh, and then how we go about tracking that on a daily basis, on an intraday basis to find our trades. Uh, I am getting a couple of people, strangers, subscribing to my YouTube channel. Uh, so I'm just going to start putting out these disclaimers at the beginning of these videos. I am not a financial advisor. None of this is a solicitation to buy or sell any asset in the markets. Uh, it is for informational purposes only. Uh, Educational, informational. It is not a recommendation. So do not follow my trades. Learn how to trade on your own. Of course, I don't actually show my trades in YouTube unless I happen to record a live session uh, and then post it after the fact. I'm not doing any YouTube lives at the moment. Uh, that will be in the future. I'm not looking to build a big following. Uh, I have a very small Discord group of traders who are trying to change their lives through trading. We all work together. Nothing is fee based. I don't make money off of anything except the markets. So I'm going to take you through two chart markups from beginning to end, and then I will review the other three of what I already marked up and what I'm looking for on those. Um, and we'll see how it goes. Uh, I was tracking of a lot of other assets, but for me, I just don't see it being necessary. So with the five I've chosen, I think I will definitely have setups on a daily basis to be able to trade. So yeah, let's get to it. All right. So this is gold, and the weekly chart is just absolutely, uh, absolutely huge. Um, I am looking at this right here. This is where we started our draw to break these highs. And we took these swing lows here, and then we came back and we took the highs, okay, and even these highs here. So I'm going to look at this as our initial manipulation, and I want to draw some deviations on that to see where we've gone to, because on Friday we broke 3,000 in the market, okay, on gold. So pretty important point. Um, and I want to look at where that's at. That is right at the 6 standard deviations, um, which I think um, is going to pretty much be enough on the weekly. You know, we've basically broken above the range, and this could be our upside manipulation to then start the sell program to start rebalancing some of these inefficiencies below us. Uh, right now, it doesn't look like we have any inefficiencies to the downside. Everything has been rebalanced, which would give us a low resistance liquidity run to the downside. Uh, Everything has been rebalanced until we get back down to 2,400. Okay. So this would be, if we do start the sell side, this would be the area I would be looking for. Uh, so yeah, let's see what that looks like. We do have some weekly order blocks down here that would certainly keep us, bouncing around a little bit up here until we get below this low, and then we could slip down and rebalance this inefficiency here. Uh, but seeing that, you know, 3,000, the break above 3,000 is right at the 6 deviations from our initial manipulation here on the weekly. I'm liking this area for a turnaround to go sell side, uh, and just come off of those highs for a little while. So let's move down to the daily and see where our current dealing range is there, which would be this right here. We swept the lows, rebalanced the fair value gap, and then went and took the highs. So this would be our current dealing range on the daily. The daily dealing range is what I like to find. We did a lot of consolidation here. We've gone uh, manipulation to the downside of range. Now we've gone manipulation to the upside of range. This could be our double manipulation move to then go and go lower and take this low out, which is 28.43. Uh, Obviously, if we invert this daily fair value gap here, uh, that is going to be our first signal that we could be headed to the downside. I would really like it if we invert both of these uh, to confirm the downside movement. Uh, so what I'm going to be looking for now is every lower time frame to start uh, showing a market structure shift to the downside. And once we get that final market structure shift on the 4 hour, uh, which ooh, we may not get, we have a 4 hour unicorn sitting down here waiting for us. Um, which we could hit that, go back up, and not actually break the high before we fall over. Um, so I kind of like that for an area to bounce back off of, at least temporarily, before falling over. We'll see. We're going to definitely keep an eye on this 4 hour and see what happens with it um, when we get back to it. But our market structure shift on the 4 hour would be breaking this low here. Um, we do have some 4 hour gaps below us. Look at how that 4 hour unicorn worked out there. Uh, I mean, that was just 12 hours straight up uh, when we got the buy signal. If you got in at the end of that candle, and you're looking at 8 hours of straight up pricing in gold, that would have been an amazing trade from 819 to 8 to 69. I mean, that's a $50 move in gold. It would have been a very, very big trade. So we're going to check this out when we get back down here. Um, but it is looking like time for a reversal. We do have our change in state of delivery here. Um, we're going to need to see this 4 hour fair value gap inverted and then see what we do down here on this 4 hour. Hopefully we have a lower time frame unicorn in the same area that we can play off of for a tighter stop loss, but we'll see. Uh, so yeah, let's go back to the daily and uh, get our dealing range set up. So the upside of the dealing range, we said this was our manipulation to head to the upside. So we will mark that off there. Okay. And let's just take a quick look and see if we've made our gaps at the right levels. I'm always doing this upside down. Got to stop doing that. Okay. Let's lock that in for the moment so we don't move it. And let's take a look and see what we've done. Um, so yeah, we made our fair value gap at the 25. A good breakaway gap that was never rebalanced. Everything else below that was rebalanced. So good breakaway gap here. We made our measuring gap here. And we made our terminus gap right here. Okay. Um, so if we measure deviations from the bottom of the breakaway gap to the bottom, from the bottom of the measuring gap to the bottom of the breakaway gap, that puts us exactly 2.5 standard deviations. Uh, Yeah, it looks that looks good to me. All right, so let's take those off. Just confirming uh, that move, and we'll do one more measurement from the bottom of the measuring gap to the low, and bingo, right off of, well, there's the one deviation there. So we just broke the one deviation, and it looks like uh, I would like to see price come back below the one deviation, and then hold, and then see us go lower. Um, so yeah, right now everything's looking pretty good. Um, so what I want to look for, if this is going to be the start of the sell side, uh, I want to measure the manipulation move. And let's just say this is going to be the very top. Uh, so I'd want to measure that manipulation move that took the liquidity and got to the all-time high, and then come down and take a look at where, let's hide this for just a moment so we can see a little clearer and see where, three deviations puts us, or two deviations puts us at this low, three deviations puts us right here, which would be rebalancing that fair value gap and getting into this accumulation block here. So I like the three standard deviations to come back down to. So I am going to, uh, before we take it off, let's do our downside quads. And let's just say this is going to be the start of it. If we break higher, then we'll definitely uh, have to look at it, right? So let's take the deviations off. Yeah. I like that. Let's get this that back on. And remember, these are daily levels, so it's going to take us a while. Uh, but this one is our higher time frame, so we're going to mark that in cyan, and we are looking to go lower than that down to here. So let's lock this one in. That one is locked in, and we will have to see if that becomes the case on the way down. Okay, so that'll work. 15 minutes. Let's see. What do we got on 15 minutes? We don't have any unicorns above us at the moment. We did make relative equal lows here, and we came back into this. Don't know if we actually came into it or if we just made a double top here. Uh, that'll be interesting. I could see, yeah, it looks like we made our double top on the 15 minute, push back down, take this liquidity, hit uh, this 1 hour fair value gap midline to then maybe push back up. Where are, okay, there. So if that's going to be top, we are going to have to work our way down here, which is going to be a lot of resistance, uh, unless for whatever reason the market starts falling rather quickly. Uh, but we could definitely look for some small trades on the bounces off of these fair value gap midlines uh, back into internal liquidity to then come back over again. So we did have our market structure shift here. We had our pullback and made our double bottom, get our pullback to break through that, rebalance, maybe pop back up. So yeah, um, that is that is gold. Uh, I'm wondering on gold if I shouldn't look for possibly the 4 hour daily ranges. So that would be here to where we are now, because gold doesn't move uh, a lot on a daily basis. Uh, 2, 3 into liquidity. We fall back off. Yeah, you know what? I'm gonna do that. Uh, Now, this is our upside move on the daily, so I am going to leave those levels on because I think you know the higher time frame is going to be a little bit more important. Um, but we swept the lows, then we took the highs. So this is our 4 hour dealing range at the moment. See, then we had our fair value gap here. We have up here, and then we had our big move up into uh, external liquidity, which is the all-time high. So I want to see where this goes. If we have to extend this a little bit, no problem. If we actually reverse from here, then uh, I'm kind of liking that. Uh, right now, it's just huge. Um, we can actually put a quad level on this 4 hour because that is a larger than normal candle, which created the fair value gap. And we could just kind of watch those levels inside of that gap to see what happens. So I want to mark those red as it is a fair value gap. So now we have our white, which is our expected move down. We have our cyan, which is our daily buy side dealing range. And then we have these reds, which are the quadrants inside of this fair value gap, which are going to be pretty interesting. So that'll do it for gold, or yeah, gold. Um, last but not least, how far are we into this video? 30 minutes? Yeah, that's about right. Okay. This is going to be about an hour long. Everybody, if you've made it to this point, but I just want to get into details on some of this stuff. So we definitely know where uh, oh yeah, I'm definitely looking for shorts in oil. Uh, we have a lot of liquidity built up underneath these lows on the daily. I would like to see manipulation above this range into this daily fair value gap to then roll over and take out all of these lows. That daily fair value gap is around 68 to 69. In fact, I'm going to mark those out because just from my initial look, that is, it just looks too good right off the bat. So definitely, definitely look for this. Okay, then I need to find my midline, take the box off. All right, so we've definitely turned over. Uh, we took all these highs, then we took the swing low. So this at the moment is our dealing range. We take a look at that. What I am going to expect to see is our 25% level where this daily fair value gap sits for us to come back in, touch it, and then roll over and take all this liquidity out. Okay. Uh, so basically, I am looking. Don't know if we're going to take this out. We're definitely going to find out. Uh, but I am basically looking from here to here as sell side liquidity. Looking for us to get down there. All right. So that is pretty much the daily markup of crude oil. So again, looking for a bounce back into this fair value gap to roll over and take out all of this side liquidity down here. Um, for a moment. And now I kind of do think we might take out this low because we have a wick right here. So if we break that low, we might as well break this low and get back into uh, this propulsion block here. Where is the midline of that propulsion block? Take, oh, bingo. Jeez. Uh, yeah. All right. So right now I'm thinking uh, that we've marked everything out pretty darn well on the daily, and I like those levels. So uh, we're going to keep them. We know that this sell side is the midline of this propulsion block or distribution block, whatever you want to call it. Uh, and that looks pretty good. So what do we got on the 15-minute at the moment? We don't have any unicorns made. Uh, we do have this 1 hour fair value gap that we haven't quite touched the midline of yet. So I would be looking for that to actually touch or rebalance and then fall over and start taking out some lows to get us down to that sell side liquidity. Or if we do get all the way back up into this daily fair value gap, taking these highs here, definitely rolling over from there to go take out target. So uh, I do kind of expect us to go higher before we go lower, especially since we inverted this fair value gap here. Um, it'd be interesting to see if we invert this one. If we do, then we're headed for these highs here into this fair value gap and ultimately up to that daily fair value gap at the 25% level. All right. So looking to go higher before going lower in oil. We'll see how that plays out. Oh, daily midline and a 1 hour midline at the 25. I like it. I like it. I like it. Above equal highs. I like it. I like it a lot. All right. So that's it for those. Let's go to the ones we've already marked up. Um, this is why I like to have other assets because I'm not real sure what's going to happen here on NQ. It's not as clean a price action as some of the other assets. It could possibly show us its hand, um, but it's going to be a little while before it does. I don't think it's going to show it on Monday of next week, maybe on Tuesday, depending on what kind of news we have coming out next week. Um, and we are changing contracts. So Monday will be the new contract on NQ and on all the indices. So I'm not real interested in trading this until the new contract gets some legs under it and shows us something on the higher time frame, which is the 1 hour, because we have a 1 hour unicorn up here, and we have uh, this 1 hour inverted fair value gap with a 1 hour bullish fair value gap inside of it, right at the weekly order block mid price, which we closed the week above that. Um, so I am still uh, bullish on the NQ, but I have to see what it's going to do with this 1 hour unicorn up here. Uh, does it show us some strength or does it fall over? We did, touch into that breaker block a little bit and then it just dumped off. So what's going to happen when we hit the midline of that fair value gap? You know, what kind of fall off are we going to have from there? Or if we rebalance it, what kind of fall off are we going to have from there? Um, so I'm a little hesitant to be trading in Q at the moment, but I will keep my eyes on it in case it just gives a really, really good setup, like a 15-minute unicorn to the upside, because that is where I am looking, is bullish. Okay. Um, I believe this is the start of we've got every time frame up through the 4 hour, uh, that has a market structure shift now. Okay. So we made the low, we came back up, fell off, retested the low, and then we finally broke this, closed above this 4 hour swing high. So that is our market structure shift right there. Okay. On the 4 hour. So I am looking to go bullish. I just don't know how long we're going to range here. And this is tradable, but I need to either see the 1 hour uh, unicorn come into play and fall back over and get through this area to go down. Uh, but I don't see that happening. But on a market structure shift, you are typically looking for a 7-0 retrace after that, right? So do we hit uh, the midline of that 1 hour fair value gap inside the unicorn and then roll over, or do we start our rollover now um, on this candle here? Why did I draw a box? Why did I draw a box? Where would 70 be? Well, 70, since we don't have any fair value gaps, we'd be looking to take out a swing low before going higher, and that is going to put us right down here at uh, this swing low here. We do still have a bit of a volume imbalance down here that we could also be drawn to. So we'll have to keep an eye on that and see, what happens on the 7-0 when we get there. In fact, I'll probably just leave price there for now, or leave this retrace there for now. Um, and the target on that 7-0 would be right up at the uh, breaker bar's midline. So that is quite interesting as well. Uh, so we're going to leave that there, knowing that is a 4-hour uh, retrace fib, and we'll see what happens. It's just it's in an area where I can make an argument for both sides of the market on the higher time frames. So I am just really not interested in trading it, knowing that I have much better setups coming on the other assets. So that's in Q. Bitcoin, I am bullish on Bitcoin. Um, I did all my measurements here. Uh, I think we're going back up towards premium pricing of the daily sell side, okay, model, and looking to completely close that gap as well. Um, we've bounced off of the 50% fair value gap. If we invert this 15-minute fair value gap up here, then I am definitely looking long to take out both of these highs and get us up to premium pricing, uh, and then maybe come back a little bit from there. So that is what I'm looking at there. On Bitcoin, my target actually um, is up here at this fair value gap, which is 3 standard deviations on the 4-hour uh, manipulation down here to get us up to this fair value gap. Um, Again, we'll see what happens, right? And then the euro, um, on the euro, I am bullish. Again, uh, we do have this uh, unicorn down here that we did tap the top of that fair value gap, and that's where we shot up and rebalanced this area here. We just came down and inverted this fair value gap, and we've been holding the high. So we've got equal lows down here we could take. Uh, to get back into discount of uh, these two levels, which would be right around here at these double bottoms, um, to hmm, Maybe get back into this 1 hour fair value gap. It's not really a double bottom, but it's relative equal lows. We'll see. Like I said, if this bullish holds and we invert this bearish here, then yes, my target is up to this fair value gap, which I believe is a daily. Uh, I'll have to go back and look, or it's a 1 hour. No, that is a huge 1 hour fair value gap. The daily I would have marked out with raise. Um, so we're definitely going to have to look at that. We have hit the midline and fell off into internal liquidity and then got our push up. We pulled back into here. So I am looking for this fair value gap to get inverted here. Uh, we did drop below the midline, close below that midline a bit. Uh, so I'm interested to see, what happens here. So we just about came down, hit it, and rejected a little bit. But uh, let's see if that needs to come down further and get back into this unicorn and see what happens from there. If we actually get into the midline of this um, and take off, I don't really want to see this uh, bullish fair value gap get inverted. Um, I'm completely okay with it getting rebalanced uh, as long as we don't close below it. And on a larger candle in the New York session, we could easily push down into this fair value gap and then close above the low of this fair value gap. So uh, we'll have to be looking for that. Okay. All right. So was that the last one? No, we have gold. No, I marked up gold with you guys in the video. So that was it. That's what I'm looking for to happen on those five assets. And again, we've got five different asset classes. We've got indices, we've got crypto, we got metals, um, we've got forex, and we've got oil. Okay, so uh, I think we're set up pretty well to be able to catch some good trades next week. Uh, we'll just have to see how it goes. But with that being said, it is a little after midnight, and this is a pretty long video. Um, not bad. 48 minutes. So we're going to call it here. Um, don't really have much more to talk about. Uh, just the goals for next week is patience, waiting for the really, 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 really good setups. Um, yeah, I was a little aggressive last week. It didn't work out all that well. So it's time to get back to patience and waiting for the really uh, just top-notch setups and playing those out uh, to start making some more money, get a few more evals passed, get them into funded, and try to get them to the point where I can start taking some payouts from those so that I still don't have to touch my large funded accounts for a while. I just kind of want to hold those in reserve or the one. I only have one big one, um, which is my 60K balance. Um, Still wanting to hold that in reserves for a while and not, you know, really touch it other than keeping it alive. Um, I'd like to get a few more evals passed, get those into funded, and start trading those into profit and start taking some payouts from the smaller accounts. So that is it. Hope everybody's having a great weekend, and I will see you in the trading floor on Monday.